Compliance, such a big word, such a scary word for some people. Some people understand it, some people don't, but in every way, compliance is a big word right now in our world. In order for us to simplify it and make it easy for you to understand and maybe to get more information about, we invited Jody Giordano, my friend, my colleague. He is the head of compliance in Elnaggar and Partners, to tell us more about compliance and educate us about what does it mean and why is it important and for who it is important. Thank you very much, Jody, for being with us.
Thank you for having me.
Can you just start by telling us how did you start in this field and why did you choose it?
Okay, that was a while ago, but yes, of course. So, well, the story started essentially my first proper job, in inverted commas, was with a financial institution giving out payday loans, actually, in the US, Canada, etc. I was a customer service rep with them, and obviously, you know, nothing against customer service departments in general, okay, but there was a point where that became not enough.
Not interesting enough for you.
Exactly.
Yeah.
So I do recall we had a department called Customer Relations. They were actually doing the onboarding and the monitoring of clients and stuff. So I remember speaking to a few of my colleagues in that department and genuinely taking an interest, because I felt like that was one of the few impactful roles you can have in a big or in a large multinational corporate, let's say, you know. So basically, after a few conversations here and there, I decided to pursue, I hadn't studied in years, but I decided to pursue some qualifications in the field. 10 years later, here we are.
Nice. Well, throughout these years, you've worked in compliance in several companies and,
yes. And
in several countries, I would assume. Can you tell us what's your experience in this field?
So after that step with the payday loan company, my first role in compliance was actually with an acquiring bank back in Malta also. Acquiring bank, essentially we processed transactions for e-commerce merchants and the likes, basically. So you know, we had very close relationships with Visa and MasterCard. So the nature of acquiring bank, basically, we onboard corporate clients or SMEs who have activity online and who need to accept online transactions, online payments, okay? Using their Visa, MasterCard, even their Amex cards. So my job was to essentially onboard clients, same like we do at Elnaggar and Partners now. Review the corporate structure, identify any high-risk areas, any politically exposed persons, any complex structures, any legal arrangements involved in the structure, you know, some trusts, anything of the sort. Once we onboard them, then of course we have the ongoing obligation to constantly monitor them. After the acquiring bank stint, which was almost 3 years, I moved to a startup, money service business company. I was helping get our licenses in the US and kicking off the operations in the EU as well. That is when I decided to pack and leave for Dubai. Although there was a 2-month traveling, I traveled Asia for 2 months in between.
Nice.
Before moving to Dubai. And once I got here, I started working with Mashreq Bank. Didn't last long. That's a story for another day. Yeah, after that I started with a capital markets firm, with a interdealer brokerage. I moved on to, which was my first experience also, I moved on to a CSP.
This switch between financial services into corporate services, does the job differ a lot? Is it a lot different? Is the risk is higher or lower? Your job itself, did it make a big change?
It did. It definitely did. I can say that with confidence, because especially with the capital markets firm, even though we didn't take on retail clients, so you and me could not open an account with this firm.
Right.
However, our top clients were investment banks, the top commodity firms, these BNPs, HSBCs, this level of client. So that just gives you a picture of the kind of client base. But the thing is, because we were members of multiple exchanges, okay, exchanges in the US, exchanges in Europe, all with different reporting obligations, including, over and above the reporting obligations we had locally with the DFSA, which were already stringent as a financial institution. So when you compound all the obligations that you had all over the world from a different perspective, and the granular reporting at granular detail for at a transactional level as well, at a trade level, because trades can be, you might see one trade, but one trade could encapsulate a large amount, let's say, of
transactions
within it, exactly.
Yes.
So all those obligations combined, it's a lot.
It's different.
A lot. So then moving on to the
corporate side.
The corporate side, your primary focus is the AML CFT side.
Yeah.
Of course, you still have commercial licensing regulations, which are over and above your AML and CFT, but they're not as. It's not as, let's say. It's still demanding, of course, but on a
not
much
as challenging as financial services.
Exactly. Yes.
At the corporate service provider level, you have the authority from one side, and you have your clients from the other side, and that's where you have to do your job.
Exactly. Exactly.
Very nice.
That's it.
Can you explain a little bit what's the main job of a compliance officer in a corporate service provider? Because a corporate service provider as a DNFBP, and maybe you can give us a little bit of explanation on that. Sure. Their job is different from being a compliance officer for other businesses like banking and financial services. So if you shed some light on that, it would be very important for our audience.
Of course. Basically, that term encapsulates CSPs and law firms, such as ourselves, precious metal dealers, accountancy firms, these kind of businesses. Okay, real estate agents as well. No. So the primary difference in the compliance officer role from a financial institution perspective versus a corporate service provider, for example, is, again, I will emphasize the reporting requirements or reporting obligations. Essentially, from an onboarding and an ongoing monitoring perspective of your clients and your partners, it's the same, okay? You onboard the client the same, you look at the client in the same way, you assess the same risks. Of course, the risks differ for each sector, but essentially the idea is the same, okay? But again, the reporting obligations versus, as a compliance officer between, in a financial institution or a CSP, again, we have noticed the recent trend over the last, I'd say, 12 months where regulators are really stepping down and clamping down on CSPs, as we very well know. And I noticed this trend also in Europe. Back home in Malta as well, I'm seeing the same trend. There's a big focus on CSPs specifically as gatekeepers, exactly, and enablers, so-called enablers, which is understandable.
Of course.
As well.
Of course.
It's understandable.
The role, your role in the firm is extremely important. I mean, because you filter out all the clients that we don't need, all the clients that we don't want to deal with.
Exactly.
You get us the background checking and the due diligence on every single client before we contract with them. Why is it important? For me, for me it's clear, but I want you to emphasize this because DNFBPs, we have real estate brokers, we have jewelry traders,
correct.
We have auditors, accountants, lawyers. All of us, we are not used to it. Back in the days, we used to accept everybody as long as we get their KYC documents, we check it, everything looks good. Why not come in? And we start doing business with them. With the laws changing, it is a little bit overwhelming, especially for real estate brokers, for diamond and jewelry dealers. I want you to explain why is it important to make sure that these clients have been screened very well, the risks have been assessed very well before we go and do business with them.
Let's just, something everyone's aware of at the moment, the ongoing conflicts globally, okay? But more specifically, in the Eastern European region, let's say, well-known oligarchs or sanctioned individuals come to you as a precious metals dealer, okay? And, however they may have gotten their funds across from their, jurisdiction over to the UAE, however that may have happened, for them, what they need to do is primarily, kind of, how do I say, obscure the trail as much as possible in terms of the ownership of those assets or the funds, okay? And what better way to go and spend those funds buying a nice, I don't know what carat, gold diamond ring or
yes.
or jewelry.
A nice apartment or a nice car.
Exactly.
And after a few months they can sell it or...
Exactly.
Yeah.
Some would flip it within a few months. I mean, the real estate sector especially is the most vulnerable. We've heard of cases of real estate being bought with crypto, and that's another story for another day as well. But these stories are common. We've heard them plentiful in the region, and why it's important is because you are at risk of losing your license, being fined severely, all sorts of reputational damage that you could face if you are caught aiding or helping, or enabling, let's use that term, we'll stick to that term, enabling certain individuals who may or may not be sanctioned, or who are high risk, or who have some certain adverse media in their past. You are enabling them to launder, essentially, their cash or their assets, clean it, and just continue their lives as if nothing is happening, and they haven't done anything. So that is what you risk. You risk your license, you risk your reputation, you risk your business as a whole, loss of revenue. Nobody wants to associate with certain companies who have such a reputation.
Absolutely.
That's a quick summary.
Yes. When we get a new client, whether we are lawyers, corporate service providers, accountants, auditors, gold traders, or even a real estate broker, how do you assess these risks? Based on what? For example, we receive a walk-in client coming to us and say, I would like to buy this property, or I would like to establish this company. What do you do exactly to assess the risks for us internally and the risk of the client as well? Exactly.
So primarily, in order to have a full picture of the risks, the potential risk the client poses, we would need to have a full KYC package. Of course, if it's an individual, let's say following your example, a passport or passports if they're dual nationality.
Yeah.
I know personally of people who have up to 12 passports. Again, that's a story for another day as well. Their confirmation of where they actually reside, residential address. Again, this is very important that it is not a mobile bill or any other mobile service. When I say mobile, I mean not just your physical mobile, but I mean any other service that you're subscribed to that is transferable, across the world. So essentially, when we want proof of address, we want fixed utilities or services. Anyway, these are the basic KYC documents, basic due diligence. Once we have that package, we look at, of course, the full picture, and then we carry out the risk assessment. And the risk assessment looks at essentially 5 areas. So you got the AML risk the client poses, the client's risk, so it depends, corporate, individual, complex structure or not, interface risk or distribution channel risk, which is essentially how did this client come to us? Was it introduced? Was there a third party involved? Is the communication managed by a third party or not? As well. So producing a layer between us as a service provider and the end client, you know, again, which is let's say something to flag, a red flag, let's say, and AML CFT risk, distribution channel risk, that's essentially it. And the client risk depends in which industry they might be operating in as well. Online gambling, high risk. Let's say, I would say spare parts and heavy machinery, for example, or gold and mining, for example. These are all high-risk industries which we need to consider for the risk assessment as well. Those are the primary areas we look at when assessing a client. And once we have done that, we determine the risk rating. Again, there's a logic behind this, and each firm has their own way of calculating. Each firm has a way of determining this risk.
Yeah. Why do you think a country like the UAE, which is majorly reliant on foreign direct investment and entrepreneurs are coming to the UAE and investing here, to make such a very strong system and to tackle and to push hard on the anti-money laundering regulations, and don't you think this will stop a little bit the flow for such investments and such entrepreneurs coming to the UAE? Why is it important?
Overall, it's a positive change, right? Like we said earlier, it's a positive change that they're kind of stepping down, clamping down on the gatekeepers,
right?
Locally in the UAE. However, I'm pretty sure also on the flip side that it has had a negative impact on certain, businesses which wanted to expand in the region. Maybe they have chosen alternative destinations. Again, it depends, on how much people can tolerate the bureaucratic processes in place. Again, UAE, countries in Europe, the process is super bureaucratic anywhere you go. So, it just depends on, just depends on your patience levels, essentially.
Okay.
But yes,
it is important. It's a process that has to happen anyways. It's not,
exactly.
There's no way around it. It's
exactly.
It's very important. I've seen Ministry of Economy have been doing significant work towards regularizing and updating their regulations and even tracing DNFBPs into correcting their measures and fixing their situations, and even revoking some licenses, making some fines here and there to make sure the quality of work on the due diligence and the compliance part in general is happening. Have you seen this as a positive, is making a positive impact in the economy here?
In the economy as a whole, I'm not too sure. However, on that point about the awareness levels that the authorities and the regulators are taking here, rolling out here, I tip my hats off to them, honestly, because the outreach has been very good with the private sector, from their end, and we I think almost on a monthly or bi-monthly basis, we have some webinar by the executive office, another webinar by the ADGM, for example. Hats off to them. They're really putting in the effort to educate the private industry. Especially again with a focus on CSPs and law firms, and you don't get it. You don't get that kind of volume of awareness anywhere else so far where I have been. Not the same volume, and that's why UAE is really doing a great job. And again, jumping back to our previous topic, because I didn't fully answer your question. For SMEs or businesses in general wanting to expand, grow their business, I mean, there's still, the fact that the UAE is clamping down, is implementing a more robust regulatory regime, should be seen or should be perceived as a positive, because ultimately it's their business that's going to be protected at the end of the day. That's going to be established in a reputable jurisdiction, and globally now the UAE is getting, there used to be a certain reputation of the UAE a few years back, but I think in general people are now starting to realize that the UAE has established itself as a really reputable jurisdiction now. And of course, our recent removal from the FATF list has also had a huge impact, which is good. Kudos to the UAE authorities. And
can you talk to me a little bit about the process of screening and onboarding new clients into Elnaggar & Partners?
Sure. So again, we previously touched upon the list of documents that we request. We are going to request these documents initially. Once we have built the profile of the client based on the documents we receive, we will screen the client directly and any involved parties. Let's say it's a corporate. We'll screen the shareholders, we'll screen the directors. We'll also review source of wealth, especially, and source of funds in detail. Once we've built the profile and we're confident that there are no high-risk indicators that need to be looked into in more granular detail, or any escalations which we need to kind of raise with either myself as the MLRO or with you as the managing partner, then we'll pretty much accept, and that's a process done. I mean, typically that process is done within, let's say, 24 hours. Typically, but then if there is a complex structure or it's a complex request or high-risk individuals involved, then we will take our time to review it in more granular detail and even ask for more information or documents if necessary.
What happens if a client at any certain point felt uncomfortable to give too much information because they are not used to it? I know for a fact clients who have been here in the UAE since 20 or 25 years, they got used to, or they used to have a much simpler way to establish companies and to get onboarded by law firms. They were not used to so many questions. From your perspective, what does that make you feel, or what does that make you decide as a compliance officer of a company whether you onboard this client or not?
First of all, communication is key, especially with all clients, obviously. That's an obligation we all have, but communication is key. If the client starts to get frustrated because of the volume or level of documents that is being requested, first and foremost, we need to communicate to them clearly our obligations as well, okay, as a regulated business. So again, we would emphasize that we need to emphasize to them. If the situation starts to become tense and it starts to get escalated and people start asking they refuse to provide X document, or
which happens a lot.
Which happens a lot, of course, because I see this also from a banking perspective. Banks now are monitoring clients on a much shorter period. So you're being requested for the same documents you were provided at account opening stage, and you have to supply them, let's say, within a 6-month period again, including certified documents. So you can understand the end client's frustrations from certain aspects, but again, it's important that we communicate clearly both our obligations and the fact that we want to operate a legitimate business and we don't want to tolerate any illegitimate activity in our company. So that should also give them the reassurance that we are, operating at a certain standard, and we will not kind of compromise with that standard.
Yeah, I will talk to you from a consultant perspective, from the law firm perspective, or a CSP. We have so many clients, we have so many companies in different jurisdictions. Of course, we screen every client in the beginning, at the start of the relationship, and with SPVs, with very limited business activity here, we do not have visibility or clear visibility on every single client. What is our obligation towards screening those clients on a regular basis? How do you screen them? Because it seems like we have quite a high responsibility towards the authority and towards the business community in the UAE. How do you screen them?
So the initial approach is always, again, once we've built a full picture of the client, which we like you said, we would have already had, and on an ongoing basis, we would first of all reach out to the client and request similar documents to ensure that there has been no changes. Again, as a CSP, if there's been changes to our client from a corporate structure perspective, we would know, of course, because we're carrying out the share transfers, change of directors. This is all stuff we have control over. We monitor and screen actively upon a change in structure as well. So that's one perspective. Let's say we have a corporate client, okay, and we are providing whatever service, legal, tax, account, whatever. And they're an ongoing client, so we've had them for a long time. What we would do is, first of all, reach out to the client to make sure no information or structure, there has been no change in information or structural changes, okay? So we would request a certificate of incumbency, we would identify the directors and shareholders again, for example. Once we have built that picture again, whether there's been any changes or not since we had onboarded them, then we will run them through our screening, our third-party screening tools, which essentially will screen individuals and entities for adverse media, any open court cases, any sanctions, any criminal charges. Could be anything, and we have found all sorts. Even in my past, I've been using these tools for 10 years plus now, and I've seen all sorts of things. So typically they are good tools, very useful tools, and also mandatory tools,
right,
for FIs and DNFBPs as alike.
What kind of advice would you give to DNFBPs who are not very much aware of their obligations towards the authority with compliance?
What I would probably do as a starting point, I would probably, whether you hire a full-time or you contract an experienced compliance officer who has had exposure in the industry you operate in, and as a starting point, I would hire this person and establish a compliance management plan, or compliance monitoring program, which encapsulates essentially the specific regulations that you need to abide by, basically, following, of course, practical advice on how to achieve that. So the CMP will encapsulate this data, and that would definitely be a starting point, which would make it easier for you to monitor, easier for you to know where you need to be looking, and not kind of going all over the place, because again, there's so many regulations out there that it can get overwhelming. But as a starting point, I would start there and carry out gap analysis between your existing operations versus your obligations from a regulator perspective. Carry out that gap analysis and start taking action. Start closing those gaps if there are any, and that will get you pretty much to where you want to be.
Thank you very much for coming.
Thank you for having me.
Happy to have you safeguarding the company and the UAE in general. This was your dose from Monday Legal. See you next week.